Hello and welcome everyone to Economic Outlook for 2025. We have all experienced the economic landscape shift in 2024. Riding on the back of 2024, the year 2025 presents new opportunities and challenges. So join us as we explore the key trends to watch for in 2025 and how to navigate them. As we step into 2025, the economic landscape is shifting drastically as new opportunities are emerging. These opportunities are reshaping the way the businesses are done in the United States. On the contrary to our past concerns, a recession is not a big concern in 2025. Instead, we're looking at a year of modest but steady growth. The job market remains strong and consumer confidence is solid. This positive sentiment and continued spending will be the engine driving US economy forward in 2025. The Fed's 2% inflation target is not as smooth as we all expected. We are for sure in for a bumpy ride, but Fed still has unemployment and target economic growth on their agenda for 2025. Looks like the Fed is trying to play a catch up as it is adapting fast to its new strategy, which is moving towards a more neutral stance. This recalibration will shape the financial landscape in coming years, starting 2025 2026. Businesses and US consumers are adapting to an elevated interest rates and are finding it to be a new normal. We do expect the 3 to 4% threshold to hold firm for US Treasuries, which should give some stability and lower the volatility in the fixed income market. Good news in the equity market is that the S&P 500 index has broken the $6,000 price level, a milestone truly worth celebrating. However, if you look at the dividend yields offered by the index, and compare it with the bond market, they appear to be less attractive, which of course will prompt investors to reassess and recalibrate their portfolios and their strategies in 2025. But 2025 still favors risky assets over safe assets, given the pro growth administration who tends to support the risk appetite of the new savvy investors. US equities continues to remain attractive, supported by potential corporate tax cuts and increased M&A activities, which is expected in 2025-2026. These factors could drive significant market movement. 2025 might be the year that will favor smaller companies after a long time, and we could see small businesses thriving. But that is not to say that the era of large cap dominance would fade. Now let's take a look at what the geopolitical markets have to offer in 2025. Japan's renewed focus on corporate governance is net positive. Looks like they are committed to adjust policies that favors generating shareholders value, which makes it an interesting play for global investors. On the other hand, China, the second largest economy, presents a foggy picture. The low bond yields hints at a potential market rally on one side, but the new tariffs, the geopolitical concern, and US policy for foreign trades could cast a shadow over future growth prospects of China. And also, China's real estate market conditions will be closely watched by the global investors. Now, shifting our focus to Europe, which may add some volatility to international portfolios, looks like the continued risk on geopolitical tensions, economic reforms, and political instability in the region could be the catalyst for much needed reforms in that region. If managed well and realized positively, these changes in the Eurozone area could benefit the global market and add some value to global investments. Let's shift gears now and look at the investment strategies for 2025. As the equity market continues its rally in 2025, look for companies that have a long history of share repurchases, have strong balance sheet, and they have strong profit margins, as these factors will play an important role for outperformance in 2025. Investors will continue to write the AI story, but this time it's not going to be a tech story, it's going to be a story about productivity and efficiencies. We could finally see a realized profits from all this capital investing that went into AI since the bottom of 2020. The AI's realized efficiency could also help lower inflation across various sectors, presenting investment opportunities in different sectors and across different industries. Investors will keep a very close eye on policy changes, particularly in foreign trade and immigration. Any surprise changes to these policies will impact investor sentiments and will also redefine sector winners and losers in the coming year. 2025 is shaping up to be a year of transformation. Old market narratives are fading, making way for new leadership and fresh opportunities. Risky assets will continue the momentum, large cap stocks are favored, lower inflation and yield will offer a strong total return in fixed income, and alternative assets like crypto will continue to be speculative. Lower interest rates could also increase the M&A activities, bringing back private equities and IPO in talk with the investors. Investors' success will lie in remaining attentive and maintaining a healthy skepticism and being open to changes. Staying with your long-term plan and adjusting portfolios along the way will be crucial. And rebalancing portfolios will add value to investors' allocation, strategic asset allocation. On the other side, global markets will offer pockets of opportunities, but again, US stance in tariffs, geopolitical agendas, and foreign policies will cause some volatility in the market. Another point is tariffs could also add pressure to inflation on the upside, which could again change the course of interest rate cuts in 2025. Investors should focus on fundamentals, value, quality, and efficient use of capital to turn market shifts to their advantage.